Welcome everyone to TradersPost for September 27th. We're in office hours. That means it's Friday, and we're here to answer your questions and get your feedback in order to make sure that TradersPost becomes the best automated trading platform for you and your trading needs. I'm here as Tom Hartman, marketing manager at TradersPost, alongside the CSO, Mike Christensen. How's it going, Mike?
Doing well, Tom. How about you?
Bitcoin up. Tom's feeling good.
It has been a good week for crypto, for sure.
Absolutely. And on office hours, we're going to get into all about this liquidity issue and stuff that's going on with Bitcoin and on the macro scene behind the scenes. But before we get there, we do want to start off with something that at the end of our last show on Friday, we were talking, and then you slipped on this. You typed something within TradingView, and then it was like, oh my God, I can't believe this is actually happening. And that is options on TradingView.
Options. So the whole chain is there now. Before, it was just the Indian markets, and it looked like they were just kind of demoing it, and they were playing around with this graphical options tool that gave you a sense of the Greeks and maybe some of the performance or the options curve available to you. But the real recent change here is that if you pull open the symbols on TradingView and you hit the options tab, there are full options chains available for all of the major indices, as well as several different stocks. So like, I think there's Tesla options on here. There's Microsoft options. No, not Microsoft. I'm not actually sure where the comprehensive list is, but I know what
one.
Yeah, what I've noticed is that they are at least covering like the major indexes. So if I want the Qs, there's the full option chain there, SPY. Now I did have to pay for options data through Opera, which is $2 a month through TradingView, and that gave me all real-time options chain data and options pricing data. So obviously what this means is that now you can wire up a 0 DTE contract, or even just a weekly, or pick whatever expiry you want on a put or call, and at whatever strike price you want, and then send over your signals to TradersPost from that options contract. Before, what we would do to support options is you would trade the underlying, and you would trade SPY, for example, and you'd send over a buy or sell signal based on the underlying price movement, and we would scan the options chain for you and execute a trade on your behalf in options. But now you can actually trade the literal contract that you want to trade, apply a technical indicator to it, send over the signal for us to buy or sell, and we'll open that contract on your behalf. So this also means that it is now possible for you to open up trades on multiple contracts. You could have maybe the SPY 572 put, the 573 put, the 550 put, whatever you want, and have multiple strategies running at the same time at different strike prices or even different expirations.
I don't know if you were in the same situation I was in, but I had some clients who wanted to be able to have strategies that either traded options or use options data as part of the indicator set. And it was very difficult. They'd have to build their own platform, subscribe to the data in some third-party place, and then find some way of tying in what they were doing on TradingView to be able to use that information before it can be sent to be executed at the broker. And I remember I was dealing with that just a couple of weeks ago. And I don't know if you ever looked into the cost. Oh, of course you've looked into the cost of subscribing to real-time options information for quite a number of symbols. It's not cheap. And so after Friday, when you told me, oh, we're gonna have to subscribe for the data because it's delayed, I was looking for $100 a month price,
$300 a month, $500 a month. Yeah.
Well, to get it on currencies, and some currencies,
sure, it can be really expensive.
That.
Yeah.
When I saw $2, I was like,
$2.
God,
$2 is worth it.
Totally worthwhile.
Yep.
And just to put a finer note on it, so in addition to be able to trade the options, so many times there are all kinds of strategies that we couldn't do before on just the underlying on the stock, that using options informations might inform your decisions.
Yep.
So for example, you might get other types of bullish or bearish signals that are coming from the options chain before the actual underlying starts moving, especially when you're dealing with with daily, weekly, monthly timeframes. The explosion, the Cambrian explosion we might start to have now, if this actually rolls out and we have access to all the different options on all the different assets, of what kind of information we can use to inform our trading decisions on futures and on spot prices
Yep.
are really enormous, because you will no longer need to infer the information or adjust your strategies every day to account for the gamma inside of the market for options, or what's going on fixed strike vol or what have you. Now you can apply that directly to your strategy. So it's extremely exciting to me.
Extremely exciting. And I totally agree. I think, and I know, I don't know if you want me to tell anybody this, but I know you're like quietly working on calculating the Greeks from an options contract that's currently selected. If you didn't want me to tell anybody, we'll just cut the live show now, and we'll make sure that I'm taking out. No, I'm kidding. Being able to calculate the Greeks gives you all kinds of information about the value of the contract that you're interested in trading. But even on a forward-looking basis, if you're trading an underlying and you want to know what the options market thinks about the forward sentiment for that stock or that symbol, it's really helpful to gather some of that data from an options contract. So I'm imagining there's going to be a whole host of new indicators that are going to crop up in the PineScript community that will give us, some new options insights that we didn't have before. I hope you're first to market on the Greeks there, Tom.
Well, I'm hoping to be the. There is some difficulty with the. Dealing with the Black-Scholes model, I've only ever had to use external libraries for that, and TradingView, the PineScript doesn't have some of the libraries that you're used to, and so I'm almost inclined to just go ahead and build a library for us to use, because I can imagine someone wants to use they want to figure out what the gamma is in their script. They don't want
Right.
to calculate the whole thing or copy and paste this behemoth into their code base. So it could be pretty interesting. I just wanted to share my screen here for a quick second so people can actually see what the oh, my screen is not sharing. I'm in the new. Do you see my screen sharing anywhere there? Oh, never mind. I see it
On the left, but not for our audience yet.
Okay. Well, it's not there. Are you able to share your screen to show what the options looks like, the chain looks like in TradingView? Because I can't
Sure.
actually.
I think so. Let's give it a go.
There we go.
Cool.
So if you go into, you're choosing a ticker, you can type in OPRA colon, and that'll show you, or the actual word options. But if you do Opera colon, you'll get all the different options that are available for the exchange.
And there are a lot. Unfortunately, they're not in any kind of like particular order. So you just got to keep scanning to see what symbol coverage they have. I've noticed, of course, Tesla, SPY, the Qs. I've seen Meta in here. It looks like they've got SPX, which of course, it's worth reminding our users, we don't currently support SPX options trading. SPY we do, the ETF. Eventually in the future, we should be able to provide coverage for SPX, but it's not currently supported. However, I do see the symbol there from TradingView, so that'll be a big one. Meta.
What I'm doing at the moment is that I'll use this app called CleanShot X, or I'm sure there's equivalent on Windows, where you can do a screen grab and then scroll and capture. And so I captured the entire list, take that image, cut it into parts, put it into ChatGPT, extract all the different text, and then organize the information the way I needed to organize.
I figured you'd come up with some. I'm just sitting here going through the alphabet now, like HIJKL, M. Okay, so Meta, N, nothing there. O, P, Q. Okay, we have the Qs, R, S, SPY, of course, and SPX. I know that's on the list. T for Tesla, U, nothing there. V, W, X, Y, and Z, nothing can be there. So there's not a lot of coverage. Obviously, it looks like we just have the SPY, the SPX, Tesla, Meta, and Qs. So not a big list, but it is exciting to see that we can at least start trading real option strategies. So what I have up on my screen here is an example of me just kind of tinkering around with a new strategy here. I just pulled the basic Bollinger Band strategy off the shelf, made a modification to it to where it's just long only. Typically, it's a long short strategy where it enters long and then reverses and goes short. But I changed the code to actually just be long only, because what I'm looking at here is effectively, I guess I can change this to the SPY put 571, which would be in the money. If I'm assuming if there's any kind of breakdown in the options price here, roughly around, we'll call it 5 cents, that might be a good opportunity to buy this put as we get to an overextended territory. However, this squeeze is kind of bothering me if I'm looking at this from a technical perspective. So it might be better to actually like trade the breakout on this rather than a Bollinger Band strategy. But I have at the bottom here the underlying, so I can kind of know where the current SPY price is. And now with this strategy, the Bollinger Band strategy, I could just wire this up with an alert and send over the standard TradingView payload here. And send this to a webhook URL to TradersPost so that every time there's an entry, I go long the put, and when there's an exit, it'll exit the put. And what we're sending over is literally the ticker for this options contract. So the strategy I would set up on TradersPost would be the SPY September 27th expiration put at, did we lose my screen? There we go. Put at the 571. And that would allow me to automate this strategy for as long as I want. Now, let's say I have another strategy that I'm running, for example, that trades from the underlying from SPY, and I want to choose those contracts. One of the things I want to work on next is how to select the best contract, or excuse me, the best options strike price based on the underlying. So all I need to know is like, what's the next available expiration and the next strike price. And I know, Tom, you and I have been talking about tinkering with a tool there that gives you kind of like the next available expiration, even if that's 0 DTE. And then with the current live price, we'll just round that down to the lowest point, and then that would be the options contract that we want to trade. But we can verify if that contract exists by using the the request.security function, and that should give us back a symbol. So I know we're tooling around with some ideas there, but definitely the idea here would be we should be able to very quickly start standing up some strategies that work in both the underlying to trade options, specific contracts, or trade the exact contract that you want to trade in an automated way.
I'm more familiar with options than futures. You're more familiar with futures than options. In futures, when you're trading, do you deal a lot with just checking to see, even on Qs or SPYs, if it's in contango or backwardation? Does that affect at all your strategy, or are you just look for the leverage?
I do like to look at the forward contracts, but that's sort of on a discretionary basis. So I'll look at the forward curve because it goes out for so long, right? When you're looking at the forward curve in futures, especially on the NASDAQ 100 or the NQ contract, you're looking at almost a year and a half into the future. So it's not as helpful to have that directly into my strategy, but I do look at whether or not we're in contango or backwardation in order to get a sense of the overall sentiment of the market.
I understand. Okay. Well, in the same way, you've talked to me quite a bit about the understanding the nuances of futures, even if you're just trading the futures themselves, is important to be able to be successful in it, not take outsized risks and all that sort of thing.
Sure.
For options, it provides a whole other level of understanding because you get now a volatility surface, which you don't get within other assets. And if there's one thing I want to make sure that everyone gets their hands on, is that if you didn't have access to options before and options data before, and that's why you weren't actually spending any time learning the Greeks, learning how useful they are and what they tell you about the markets, now you want to get ahead of the game. You don't want to wait till TradingView drops the options feature for everyone. Get started now and get your toe wet, dip your toe in the pool, because I think in the same way that prop firms are becoming super popular for risk management and for trading, options are going to become more and more and more popular for retail investors, not only as an asset to be traded, but as an indicator itself. So I don't want to hear anyone who go like, oh, what's your best indicators? And they say RSI and MACD and moving averages, and you don't mention the Greeks for options. It means you're really at the bottom of the barrel from my perspective, I got to say.
I totally agree. And you've inspired me. I've always looked at options from a very high level. I haven't gone as deep as you have. So I'm going to also hit the books this winter. With TradingView now supporting options in this way, there's just so much we're going to be able to do. Baking this into part of your strategy for the underlying, I think, is one of the most fascinating parts of this. You know, being able to pull options data as like a sentiment indicator or a trend following indicator, or even just a reversal signal. I think oftentimes times the options market can give you a lot more about what's about to happen before the underlying signals anything to you.
That's exactly right. And since you've gotten me on the VWAP strategies, especially dealing with the daily and weeklies,
Yeah.
one of the issues is not necessarily understanding if you're going to push up on the outer boundaries of the first deviation away from the VWAP, and so you can't necessarily tell. But with options, I can. With options, I know depending on what's in the money and what the Greeks are. If the my RSI being at 70, I'm inclined to go to 80 and 90 versus reversing from there. And so I'm so excited. Okay, let's get back to Traders Post content. But before we get to the questions for this week, I just wanted to pull up something that I don't know if you saw this floating around on Twitter in the last couple of days, and that is this post in Bloomberg that was talking about uh, trading on the Indian markets, and
Mm.
basically what it's saying that algorithmic traders have made 7 billion in India in the fiscal year 2024,
Yep.
while 93% of non-algo traders are losing money trading derivatives, futures, and options.
Mm.
So obviously, here, if you read the article, it's saying more specifically that it is institutions and prop firms that are using algorithmic processes in order to make their profits, and retail traders are using the futures and options. But I wanted to just hit on the point here that the large institutions, they're all getting on board that if you don't have this, if you're not really picking up more of this algorithmic trading, you're going to be behind the curve. And the retail traders who are understanding this, right? Because if you understand the mechanisms by which the institutions are placing their orders, right? So for VWAP, which I keep harping on about because I love it so much, where they have to use some sort of mechanism, for example, to figure out did they get a fair price for their 10 million shares they wanted to purchase, while you understanding that they have to dip into the pool in order to get access to those shares that you can trade along with large institutions and commercial entities. And so retail traders more and more are going to get picked off, as we're seeing here. 93% of the retail traders are not succeeding if they're not using algorithmic processes. You want to use a service like TradersPost in order to really, if you're not married to the idea already, if we haven't convinced you, you have to know how you can automate your strategy, because if you cannot turn your strategy into a series of steps, algorithmic steps in order to follow, then you're guessing. There's a lot of hope and a lot of chance happening within your process. Would you agree with that?
Absolutely. I think, one of the things that attracted me to automation early on, after the first few years of just trying my hand at trading myself, was the fact that I was just inconsistent with risk management in general, or I just had sort of a bland idea of what risk management really meant. And I think one of the keys to building a strategy that works effectively is baking in that risk management into the strategy, because that really is the big difference here. And algorithms, or at least automated trading in general, provides that ability for you to create something that consistently scales, so that you're less likely to go, you know what, I've been on a run. I am in God mode right now, and I've been on a streak for 3 months straight. I could take any risk I want. And the next thing you know, you're taking, 15 NQ contracts and you're leveraged to the hilt, and you lose your entire account and the mortgage on your house. So yeah, I think automated trading obviously provides an ability for you to be a lot more consistent.
Excellent. So starting off with the questions for this week, our first one comes from Sneaky Ziki, who asked on our Discord, is there a channel where we can post indicators and strategies we find on TradingView so others might find it beneficial? Um,
I'm glad you asked.
yeah, we do have a channel on Discord called Sharing is Caring,
Yep.
where people do post different indicators and strategies they find are helpful, especially their own strategies. It's interesting to me to see the people who are like very proud that they hit on a strategy that's actually profitable, or at least has the seeds of profitability, and they share that with the group. And what you'll find often is that people will provide feedback and be like, "Hey, this is how I tackled that problem," or "I ran the strategy, and you might want to consider this." And every time I see those conversations go back and forth, it warms my heart.
I totally agree. I've had a hard time freeing up enough time to join the Discord channel, but I know the several times that I've been there, I've been one of the ones who was happy to provide feedback on some of the strategies that I see. I've tried so many things that I feel like hopefully I'm being helpful there. I can tell you what I've sucked at many times or what doesn't work. So, and I can also show you what has been pretty successful over time. But I do intend to get back in there and share more strategies because we do care, we do want to share, and I think there's a lot of ideas to be passed around. The fact that we have options data now, I'm definitely very excited to share some options ideas there.
I've been wanting to pitch to you and John the idea of retooling a little bit of the categories, more to remove a bunch of categories because
Oh, in our
I
Discord?
yeah, because sometimes it could
Mm-hmm.
feel for me it's like I'm a millennial. I go in here, I go, yeah, great. I see all these different categories. I'm perfectly happy with it. But I'll show it to somebody else and be like, I don't even know where to start here, where to have the conversation. And I'd love to have it like very clear the where the lounge can be. Because sometimes like stuff that you and I even talk about, where I just want to shoot the breeze and point out something that I saw. I love to be able to post that in there, but I sort of feel awkward posting it in general because people are always asking for question like help on using
TradersPost.
TradersPost, which makes
Right.
total sense. That's what it's for. But when I see something like off topic or whatever, I go, well, it's not really off topic. I'm saying something that could really be useful. So maybe we could touch on that and retool some of the
Sure. Yeah.
categories.
Let's I'll open up to our audience as well. If you guys are in our Discord and you have some ideas on other channels you'd like us to create, let us know.
Excellent. All right, next up, this is a question that came up recently from AcerBot. I'm using a prop firm that doesn't offer TradeVate but offers NinjaTrader. Can I still connect to NinjaTrader through TradersPost through the TradeVate connection? So I just
Yes.
actually wanted to read you a response that another user put into the Discord, and I want to know if you could let me know if it's correct or not. Chris was saying that NinjaTrader desktop platform allows to connect to multiple brokers, and TradeVate NinjaTrader is just one of them. But unless you have a direct TradeVate login, you can't connect TradersPost to NinjaTrader. That you have to have a TradeVate login.
That's right. So, as far as I know, NinjaTrader, since the acquisition of TradeVate, has done pretty. They've done a pretty expansive process to try to unify all the accounts. So you should, in theory, have a TradeVate account. You just use your NinjaTrader login, and we've documented this in our documentation as well. If you have this question, I'll see if I can pull up the note on it again. But what we've been advised of from our friends at TradeVate and NinjaTrader, it's all kind of the same team now, is that you just have to log in with that NinjaTrader login. I'm trying to find the original post here. It's under brokers, and then you hit the NinjaTrader one, and it specifically explains that NinjaTrader is built on top of our TradeVate integration. You just connect to the TradeVate broker using your NinjaTrader username and password. So we recognize this is a little confusing because it feels like they're two different platforms, but they've done the work to try to combine all these accounts together. So in theory, you should be able to connect your account for a prop firm to TradersPost by way of TradeVate with your NinjaTrader login. Did I get all that right?
That's right. Excellent. Okay. And I just wanted to shout out Chris there. Thank you so much for helping in the group. You're one of those people who, whenever someone has a question and you have an answer, you're not shy to provide it. And that's exactly what we want to foster here. All right. Feature request. Someone was asking, is there a trade log with nice graphics, like a chart with profit and loss stats over a certain period of time that's available within TradersPost?
Not at the moment. So what I built like earlier this year was what I'll call portfolio analytics, which basically just take your running daily balance that we calculate at the end of each day and any cash adjustments in your account if you've provided them, and provides some high level analytics to the performance of your account. What's your annualized return, Sharpe ratio, Omega, max drawdown, things like that. That's at the broker level. So your broker connection should have that data. Now, it's not historical. It's based on the date that you connected your broker to TradersPost and only from that date forward. So you might have had an interactive brokers account for 5 years or 15 years in my case. But we're only going to have data since the time that you imported or added the connection to Interactive Brokers from that day going forward. So to this exact question, we are currently working on an analytics package that will provide trade P&L data along with nice fancy charts and P&L data at the broker level, at the strategy level, the subscription level, and down to the trade level. So this will give you a really good comprehensive view of exactly how all of your strategies are performing, how individual strategies are performing, or even how you did on your last trade.
I don't know if you're seeing all these posts on Twitter or on Reddit, but I was actually blown away by Cursor AI, which is this development tool that people are using in order to create apps and interfaces and stuff for themselves. And one of the things that people are doing are creating sort of like tools to surface information within their portfolio or their trading styles or what have you.
Mm-hmm.
And I'm curious about the arms race that's going to happen between TradersPost and us figuring out all kinds of interesting ways to surface information for you, and the ability for someone to pass the a screenshot of their of the back end of their TraderPost dashboard, feed that to an AI, and then it displays information in a way that they might find useful. Of course, the problem everyone's going to run into, which I ran into as well, is that you'll sit down, you'll be like, okay, I'll use Cursor AI in order to do it. I'll generate something, and then you go, I don't know what actually looks good or what I should be asking. And then you'll find out, oh, that's why I need TradersPost, because they got people sitting around all day long trying to figure out how to make this better, how to surface information, and what's useful or not useful. And so you're going to want to deal with companies in the AI world who are innovative, who have ideas, who are always thinking, because we're also using those tools in order to make things better. You're not going to catch up to us.
Sure. And I think we've all got, at least on our team, we've all got experience with these tools enough to tell you what's worth paying attention to. There's 100,000 different metrics that you can analyze when it comes to, trade and portfolio performance. But what really matters to most people is, how well am I doing? Do I have more winners than losers? And when I win, do I make more than I lose? And I think we'll focus on things like your general equity curve and your calendar of wins and losses, so that you get a sense of like, how did I do in September? How did all my strategies do? How did my how did things occur at the broker level, and so on and so forth? So that's the idea.
Plus, with AI, it's so cautious, right? It never wants to say anything to push you one direction or the other. So cautious that I was using Open Interpreter in order to generate. I fed it a chart of Bitcoin. I said, hey, what would you tell me about this chart for Bitcoin? Is it about to break out? Has it broken out? What should I be doing with this? And it does this whole analysis. It went to pull information from Y Finance and it created a React app, and it showed me a report of what's going on. And the conclusion at the end of the report is Bitcoin looks to be going up, but there's no guarantee it goes up. It could go down, so it can go either way.
So
it
said nothing.
Exactly. I was like, okay, so you're like every other investment advisor I've ever met in my entire life. Thank you very much. I don't know that we're gonna find an AI system that's like definitively this is bullish, but we'll see.
I find that a little frustrating, because at the end of the day, it's not our job to try to predict what's going to happen. It's our job to measure what is happening, right? Like the key to a high probability setup is just being accurate in your current measurement. What are the chances that it will go up from here or go down from here is based on how well you're currently measuring the market, including measuring the sentiment from the options market. And so it's kind of strange to me that the model or the LLMs out there right now aren't willing to at least give you their sense of how the market stands today, right? Are we in overbought or oversold territory? Are we, more greedy or more fearful at the moment? Those extremes are what we're looking for. Although I still maintain we're still kind of in neutral territory at the moment.
You had said on a previous episode the idea of at least using the AI, or not at least, but a good reason to use AI is to to analyze your own emotional state.
Ooh,
Go, hey,
yeah.
am I too nervous? Am I too angry, or whatever? And with a new voice model, have you tried the new advanced voice model for ChatGPT?
Okay, so I have a story on this. My kids do not really play around with ChatGPT all that much, which I find surprising, that I'm more in tune with latest technology advancements than my own kids are. I brought ChatGPT out to the table at dinner the other day, and I turned it on. I got the advanced voice functionality because I've been on that wait list forever. And I just said, hey, my kids are at the table. I want you to have a conversation with them and ask them how they're doing. And it was the most hilarious thing. They started testing its ability to parse their more Gen Z lingo. So they were like Skibbity Ohio Riz, or they were asking about some random YouTuber that they've been following recently, and every time it knew what they were talking about. So I found that part amazing, that my kids were so blown away that ChatGPT has knowledge about their world, if you will.
Have you tried? Well, I don't know if you have that problem, but I keep the chat on my computer, and not on my computer, but my phone next to my computer. And as I'm talking through what I'm thinking about for a trade, I'll ask it to tell me if it thinks then I'm being impulsive or too eager or
Really?
chasing anything. Yeah, just respond to me. Just tell me, hey, you sound like you're a little bit whatever, and it will. It'll actually pipe in. Now it'll also chime in other times. It'll talk other times, but I'll just tune that out. And but I even had it when I had it on my desk when I was talking to my wife, and then I was like, raising my voice to my wife and playfully, and it reminded me, hey, you're a little bit too heated there. You're gonna want to calm
No,
down
it
a bit. I was like,
didn't.
oh my god, yeah, because it didn't know I wasn't talking about stocks. I was like, this is unbelievable. And then when I played with my kid, it felt so real to him. He was embarrassed. It was almost like the AI was another person listening to what we were talking about.
Whoa.
And I was just talking to him about what we're normally talking about, but to have this other voice there, he's shy and blushing. I go, it's an AI. What do you worry about? He's like, I still feel nervous about this AI listening to me. So we're getting there.
We're getting there. And my kids had the same kind of response too. They were both very shy to talk to it, which I found really interesting, because it's like, there's not going to be any judgment that comes from an AI model, obviously. So there's no reason to be too shy, but they just weren't sure what to say, like how to interact with it. It still feels a little unnatural to be interacting with an AI model. But I think, to your point, if you treat it like it's just another human being, I think we're going to be surprised how accurate it is in just having a normal conversation. The fact that it's picking out your emotions without a lot of contextual history about you, Tom Hartman, is really fascinating to me, though. Like, how much do you think you're actually able to influence it agreeing with you? Because you know how in general the models tend to be deferential. They tend to agree with you more than disagree with you.
Mm-hmm.
How likely is it that when you ask it, hey, am I being a little emotional, it's just going to agree with you?
I'm just asking it to pick up. Maybe it's picking up on the words I'm saying. Maybe it isn't picking up on the tone, but it has tone. And when I ask it to have different sort of, because I'll actually ask it to whisper all the time, so that there's a whisper happening in my ear constantly, and so it'll say like, "Hey, maybe you want to choose different words for what you're saying. Maybe you want to be a little bit." And I'm like, "This is it is picking up." Like I never had to
So
correct it. It was never wrong.
We're like 6 months away from the movie Her. Like, I wish that Scarlett Johansson had penned a deal with OpenAI, because I would have loved to have her voice in my ear.
That's right. All right, so we'll move on for the last question for this week. Someone was saying, I was just wondering if TradersPost can see if I can see in TradersPost the profit and loss of each and every trade I made. When there are many trades, it can be difficult to keep track of them by going through the notifications.
Yep. So we hear you loud and clear. This is exactly what we're working on next. This is part of our analytics initiative, and our entire objective is to try to take all your historical trade data, wrap it up into an in and out trade, like effectively keeping track of, even when you scale into a trade and you scale out of a trade, we're matching the quantities together and turning that into a position so that we can track your performance of your completed trade. The way we present that is the part that's, kind of what we're working on next. We've got a design team who's going to help us with that and make sure that everything is presented in a way that's really beautiful. But absolutely, we are trying to solve this problem actively.
And finally, we'll end on this point. John's not here this week, but he will be here either next week or the week after to talk about some of the updates that TraderPost is making to the quality of life, to the back end, to the systems. If you don't want to wait, you can always decide to go straight to the upcoming releases in our docs page, and you're going to see there's a plethora of new updates that are coming. really some things that make using the small things, the day-to-day using of TradersPost that much better. We went through it recently, and I gotta say, it's fun. I'm also like I feel like I'm the first preview of the audience. You guys make the changes, introduce it to us, and then it goes to the rest of the people, and I think everyone's really gonna love it.
Yeah, I think this is a big release. There's just a lot of small things in it. So we'd love your feedback, obviously, as we roll it out. It's currently in staging, should go out not this weekend, but next weekend. So I would be prepared for October 7th being, or I'm sorry, yeah, October 7th being, no, yes, October 7th being the date that we get excited about some new changes.
Excellent. All right, that's it for office hours for this week. We will be rolling right into after hours, where we're going to be talking about some Bitcoin stuff and some global liquidity stuff. Very, very interesting. But as always, if you have any questions for next week office hours, please feel free to post them in Discord, send us a message on our support, or you can post it on social media and on YouTube channels. We're always happy to get your feedback, to answer your questions, because we want to make TradersPost the best automated trading platform for you. So thank you very much, and we'll see you in a moment.
Cheers, everyone.
Now for After Hours with your hosts, Tom Hartman and Mike Christensen.
It is after hours time to let our hair down, get our bourbon inside of us, and talk markets. How has been your, other than Bitcoin, have you been paying attention to the rise in Bitcoin? I imagine you are.
Of course, we just broke that recent that local high that I've been looking out for. That's a good signal in my mind. We've got some resistance coming up. Happy to do some technical analysis on it as we continue this conversation for sure.
Excellent.
And I didn't know bourbon was involved. Why didn't you tell me that? I've got it right over here on the counter. I'll grab my bourbon.
All right, let's start with the headlines for this week. For me, these are the two most interesting things that have been happening. And first, it's that China has unleashed a storm of stimulus. That is money printer go burr. That is them doing whatever they can in order to get the market out of what could be a tailspin recession. We'll see what we have to say about that. And then after that, we're going to be talking about the how the SEC, the first step in the approval of options on the BlackRock Bitcoin ETF, has passed for the IBIT ETF that trades on the American stock exchanges. It is the first time that the options for Bitcoin would be approved for a spot ETF. It's not out yet, but it could be big news. So let's start off here. I gotta say, before we actually, just to put some context for what's going on with the China stimulus, I'm just going to play this video for us, and we'll come back on the other side.
So the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? So yeah, they came the other day, and what's his name, Pan Gongcheng, he came out and he was like jovial. It's like, whoa, jovial, saying we're going to cut and we'll give you more. And he said we'll do more and more if needed. Now the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things, and that's very strange language, especially for any central banker, but especially over there. So that was the first thing that happened. And last night, we heard that they were going to have some kind of meeting, but they kind of blew away expectations on the physical stimulus. What can happen around the world when they do that? That's what you have to ask yourself now. So now you have the Fed. So just to backdrop again, the Fed's easing. You have a few more easings coming. The Europeans are lowering rates. And now the Chinese are lowering rates, okay? And they're aggressive in how they're going to do it. And they're also, believe this or not, swap facilities to buy stocks. Encouraging buyback of stocks. Encouraging buybacks of stocks. Okay, this is China, all right? This is stock buybacks. Not only encouraging it, lending you money.
So that is the PBOC, the People's Bank of China, who are, for the first time that anyone can remember, not only are cutting rates, but are cutting it dramatically, and promising that no matter what, they're going to keep on pumping liquidity into the markets. Now, if anyone's been paying attention to the China market, it's not been good. All right, the Chinese stocks have been down. P's are down. It's been pretty rough. Essentially, they're at potentially 2008 global financial crisis levels of recession on the the beginning part of that in China. And so in order to offset that, they are pumping money into their systems. They're lowering interest rates, they're lowering RRP, they're buying back stock in the Chinese markets. That's never before have we ever seen that. That stuff we saw like in 2020 COVID levels, where they were buying back stocks in order to keep the market up. Not just China, but countries around the world. And now China's doing it. So it's what that means is that I didn't think we would see 2020 levels of liquidity being pumped in by central banks again until some other major crisis. But I didn't think we would see 50 basis point cut from the Fed with no there was no drop in the market. There was nothing. What are they seeing that is saying that they better now cut 50 basis points? They were all very casual about it. It's sort of like, oh, it's like when I tell my wife, hey, maybe we should just go into the car and just drive. Just come in the car right now. Just come in the car right now. We're going to drive somewhere else. What's going on, Tom? Why is there smoke coming out of the house? And so we know that global liquidity, which is the availability of dollars that are flowing through the system, happens often when there's a crisis. COVID V, Volmageddon, Brexit, all these different things. But now we're getting all of that before the crisis. Does that tell you anything that's going to happen, Mike? Does that make you fearful or concerned about what's around the bend?
Well, I've never really been all that attracted to Chinese stocks. In general, returns on equity are, subpar. Same thing with the Japanese markets. It's usually American businesses that truly just put up incredible returns and that obviously get proven out in forward earnings per share. The struggle I have with something like this is that this is going to artificially inflate EPS numbers from any publicly traded Chinese companies. And the reason why is because if they're borrowing money to buy back stock and increasing the amount of outstanding shares, that's obviously going to increase the price per share, right? So we're going to see some improved earnings per share in some of these companies, but it's really kind of a ruse, if you will. And then I guess the question is like, what's the interest on this? How does this show up as debt on their books as well? As debt to equity starts to increase with some of these companies, I'd be curious about what the health of those books looks like and what the cost of that capital is. Are they lending out this money to do stock buybacks at 0% interest, or what's the interest rate on that?
Or even to buy real estate. The thing is,
yeah,
I don't know all the details of that, but we have seen in China, but we have seen things like that in the United States, where it was possible sometimes to borrow money and then, I mean, a lot of the banks are doing this, borrow money and then invest it without any risk at all. They're just making money on the difference. As long as the thing that you invested in provided a yield that was higher than the yield that you were paying, well, then it was essentially free money. Here, they seem to be going a step further of basically guaranteeing it that no matter what, you can't actually default on that. We just want you to be pumping money into the systems. I mean, there all systems go. Their central bank chairman came out and basically said, we're not going to stop. We're flooding like crazy. And they've been almost completely against that messaging over the last 15 years. So something is happening where they flip their script. Now, the reason I brought up David Tepper is that I didn't put the full thing in that interview clip, but he says at the end, they ask him, okay, where he's investing in some of these stocks, I'll show it to you on the screen over here. These guys are Chinese stocks that within the last couple of weeks have gone up 50%. Right? This is Alibaba. We have the Chinese ETFs. These are, this is straight up. Like this is insane. This is
crazy.
GameStop level jump ups. And he was saying at the end of that they were asking, well, how are you hedging your position here? How are you hedging all these Chinese exposure? Because he said he went all in, 100% all in. And he goes, my hedge is that I'm sure of my trade. He says the hedge fund manager is like, I'm not this is a trade of a lifetime and I'm going all in, and all I'm waiting for is a dip to happen. If a dip happens, I'm going to buy even more. And he goes, we've never seen anything like this, and these stocks are going to absolutely rip because it has nothing to do with do retail investors think that it's valuable. The government wants it to be up. And
interesting.
This is what I find to be this is what I find to be interesting, because this is what the point I try to keep hammering home with a bunch of people, that these these spikes that we're going to see in these stocks, both up and down, we're going to see more and more and more of them. I know you've heard me say this so many times. Like, we're going to see these spikes up and the spikes down and spikes up, spikes down for the next few years. And the idea is, how do you trade this?
Right. No, I think maybe Tupper's feedback isn't all that surprising. I remember a quote from a long time ago from Warren Buffett was that his quote was that risk is really not knowing what you're doing. So if he's confident enough in his trade, then he's already managed his risk in theory. The fact that he's all in on it, though, is a little confusing. But if you think it's the trade of a lifetime, then fantastic. Your confidence is either going to pay you handsomely, or you're going to lose quite a bit. We've seen fund managers lose more in the past. We've seen them lose billions and billions of dollars. So it's not unusual for a bad bet to be made. That said,
and sometimes the trade is the all-in trade, right? Because if you're right,
sure,
then you're a genius. For 10 years, you're a genius.
And you're going to, yeah, exactly. You can carry your entire career off of one trade sometimes. And sometimes bad bets can have positive outcomes. This could be one of those where it's a bad bet that still has a positive outcome.
That's right. Well, I've been waiting for this liquidity storm because it's not just PBOC. Like, central banks all around the world, I mean, for the exception of Japan, and they're going to have to do it eventually. If China's lowering their interest rates, Japan is going to have to raise theirs. They're adding liquidity, I mean, like crazy throughout. And if this causes the currencies over there to strengthen, let's say the yen and the yuan strengthen, well, that'll bring the US dollar down, and that'll be even more liquidity on our fronts. And then this also all pretends to this idea that if this liquidity does funnel through the systems, and these performances are going to happen in these stocks that are go up, not because of fundamentals, not counting liquidity as a fundamental, well, then we're going to have this wealth effect that'll cause more spending, and then inflation at 15%, like we've been talking about, we've been talking about in the last after hours. Well, then the story writes itself. Because if we get stocks at all-time highs with liquidity pumped in at 2020 levels, well, we know that inflation story. We know what happens after that. And what is bothering me is that none of these central bankers, none of these economists are even saying anything like that. They're not saying, hey, by the way, we're seeing exactly what we saw 4 years ago. We should expect 15% interest rates. So it's exciting to me because it's so interesting. The only edge I can have is on these macro moves is that there's an interest for governments and central banks not to. They want to telegraph more money within the system, but they don't want to necessarily say that's the case. It's almost like people don't want to let the cat out of the bag. And so if you're paying attention to PBOC liquidity, well, then you can get an edge on these things if you know these things are going to happen. So I'm expecting the same sort of thing to happen within U.S. equity markets, because they're like usually the last. That's usually the last place that happens. And if these guys went up 50% in 3 weeks, we can expect our stock market to also go up 50% in 3 weeks. That can happen, and that to me is long assets and long calls, and you can make 10x on those calls.
Well, I'll tell you what, I'm interested in the carry trade on this as well. If the Chinese government is giving out, any amount of their currency at low interest rates, I'd be interested in leveraging something like this.
Fair enough. Actually, that's actually, I didn't even think about that. Yeah, actually, I used to trade the. Well, no, I can't get currency options on the yuan because there's 2 yuans. There's the onshore and offshore yuan, and I don't know which one will go up in value. So who knows? All right. Aside from that, I am also very interested in the idea of our next story, which is the options on the IBIT ETF, the BlackRock ETF for Bitcoin. And I mean, we talked about options in after hours on TradingView. I'm talking about options all the time. Options to me are like what the market is. So everyone will forgive me, but I mean, it's a place to make money. You can make quite a bit of money on that. And what I'm interested in Bitcoin is that we've had a drop in realized volatility in Bitcoin over the last 10 years, right? Not only versus altcoins and stuff like that, but even what you would expect from what used to be a 70 vol asset. I mean, at one point it was a 100 vol asset. And so the idea was, okay, if you're holding on to your Bitcoin, or if you don't want to deal with the secondary space, you want to deal with your Bitcoin. Well, if I'm not going to get the upside, like, why shouldn't I jump to Solana? Why should I jump to Ethereum? Why shouldn't I jump to other things that are going up higher if number go up is what I want? Well, what
Number go
happens?
up.
Yeah. Well, what happens with the lower realized volatility in Bitcoin? It means that if they add options onto it, well, now you can get your volatility, right? You can have volatility within the option space without necessarily the volatility within the asset, or the other way around. The options can cause gamma squeezes within the options, can cause volatility within the underlying asset. So we might actually, one way or another, be reintroducing volatility to Bitcoin holders, either on spot or in the options space, which to me is super exciting, because if these options get approved, then that paves the way for a bunch of other Bitcoin ETFs to get their options approved. And what does, imagine Bitcoin at, what is it, $65,000 now, back at when Bitcoin was 5,000, that volatility, if that comes back in, well, then the $5,000 a coin, the $1 million a coin, it's not off the table, because these things, these gamma squeezes with liquidity being pumped in, you don't know where that can go. You tell me you saw, not you, but the royal you tell me that you saw GameSpot going at $75 or whatever it went to, or the high number that it went to. You tell me you saw that. Well, we know that's options led. Options drives that. You tell me the options driving NVIDIA. Options play a huge role, and we're introducing that now to global traders on the Bitcoin space. Are you following this at all? Are you interested? Does this give you more of a desire to jump
For
into
sure.
the option space?
Well, I mean, we had this conversation recently. The last time I had the ability to even trade options on crypto was FTX.us, or the ledger there. So the idea that we could trade options on these ETF wrappers obviously opens the door to more people participating in the crypto market through derivatives. That's exciting. That means that could push the liquidity around that. And I think that could also provide an opportunity for me, because I don't ever want to take a risk on one of these sort of third-party unregulated exchanges in options. And obviously, SBF kind of ruined it for everybody there, where I don't really trust any exchange unless I know that they're well audited anymore. So the idea of being able to do it through a regulated exchange and regulated entity is definitely exciting.
I used to trade options on Deribit, which was the only platform that I knew that allowed for options tradings directly on spot Ethereum and Bitcoin. But then it became no longer available to Canadian residents. And even when I was trading it, you weren't getting big gamma squeezes or big moves, because it wasn't an extremely liquid market. The idea here that these options that are going to be on the ETFs will be in the mix with the market makers and the dealers that are there, and that it'll be subject to all the same sort of forces that now I'm very familiar with, is what really makes me excited. Not just options, but that they're happening on US exchanges, because the possibilities for things to go absolutely crazy with prices is really opens up the door without me taking on any more risk, because I pay the premium for the option. I know I can't lose any more than that. I'm not writing options. I'm not selling options. I'm just buying options, and then I can just hold my crypto. I can accumulate my crypto like I've been doing, without having to like gamble within the crypto space in order to get the 10x, 100x. I can do that within the option space, which I like a lot more. So we'll see.
So I want to sort of tack on to this subject around IBIT, and specifically BlackRock and the relationship that BlackRock has with Coinbase. Are you aware of the rumors that were circulating that Coinbase was effectively selling paper Bitcoin to BlackRock? It's kind of funny, because really there was no evidence for it. It was just pure speculation, but it circulated pretty quickly and pretty widely on Twitter. And I really kind of appreciated Brian Armstrong's response to this on Twitter. So he actually, he he brought receipts, and I love his little intro. He's like, Baldy locks here. Not sure what all this is about, to be honest. All the ETF mints and burns we process are ultimately settled on chain. Institutional clients have trade financing and OTC options before trades are settled on chain. He goes on to basically say, like, if you want audits, Deloitte audits us annually. We're a public company. To the point, I mean, it's like, the all the information's there. Now they are revising this to where they're actually going to publish this on chain now, so we're aware of how many Bitcoin BlackRock is actually holding as part of the ETF, which is cool. Like, good use of blockchain technology. That's great. I just love that some of the responses are don't trust, verify. Okay, great. Like, at one point, though, do we just trust because there is a clear audited process? The evidence is already in front of us. Like, you need it to be in a specific form in order for you to trust it. What are your thoughts on this?
That's right. Well, I find it very funny because in the crypto space there is that sort of mentality, but people act like institutions. Once the institutions get corrupted, we then lose trust in the institutions. But we forget that we wanted the institutions to begin with, right? You want things to decide. Okay, we're gonna take charge of making this decision or doing this quality inspection or whatever, and you go about your day all the time. Where 95% of everything that you're dealing with is some institution that is validating it. And so I don't believe in really, unless there's some sort of smoke somewhere, rumors or what could be, I don't really care. I trust that the people are telling me the truth until something shows me differently, because otherwise I will be Peter Schiff waiting for 20 years for the world to turn over before it actually turns over.
just have at least a side bet ready to go in case there is some potential that the scam you think exists, right? Maybe that's a trade opportunity, right? Is there any way to hedge against the possibility that any of this is fake? I guess in the idea that there's no real Bitcoin underneath the surface under BlackRock's ETF, there would be a trade there. There would be a way to hedge that. If it was ever discovered that Bitcoin isn't there, then effectively that's false supply in the market. So perhaps there's a trade that you could construct for something like that. But I just found, I'm sorry.
As a trader in the trader mindset, if someone doesn't tell me that or show me that they've put on a trade to express their idea, their fear for a thing, I go, then you're not really fearful. Because what are you talking about? You're telling me you could make 2x on the trade just betting against what you're saying, that what you're guaranteeing me is the problem, but you're not going to do it? Well, then get out of here. Beat it.
Well, so this is how you know we're both traders. We're like, I don't really care what the news says unless there's a trade opportunity.
That's exactly right. I'm always like, what's the trade? Well, when I watched the movie Don't Look Up with the asteroid coming to Earth, the whole time I'm watching that movie, I'm like, what would I trade? Is it energy? Is it
right to the very end?
You gotta know. Yeah. Excellent. Well, those are the only things I want to talk about this week. I just want to tack on here something just to pay attention to the details that are happening within the macro space, because for me, the macro space, what happens in macro space tells me what strategies I could run intraday, what can I bet on, what kind of risks I'm opening myself up to. And we're seeing cuts around the world, massive cuts before any major tragedy has happened. We're seeing gold up. What is it? All-time highs for gold now, quietly marching its way up to 3,000.
It's back a little bit today. We have a little bit of a pullback, but yes, Bitcoin's looking like it could be the year-end winner, though. By the way, year to date, we're up 46%, which is beating everything else out there.
Absolutely. But gold only goes up because the major purchasers for gold are central banks. I don't know if people know this, but central banks are the ones who move the gold price up. If central banks are not buying gold, there's no point in buying gold. And so they're buying gold like crazy, and central banks only buy gold when they think there's some sort of systemic risk. It's just that systemic risk can be there for 3 years before the trade actually happens. The two other things to see is that real estate prices haven't really adjusted with the rate cuts, or real estate expectations, not prices, but expectations hasn't adjusted. But the thing that's the most telling is that the 50 basis point cut hasn't reflected within the bond market. We're getting the steeper in our curve where interest rates are still rising. Well, it came down and now it's rising still. And so long-term rates are going up, which means that the bond market is saying, hey, we still think inflation is a long-term issue, which is which is very interesting. So bond prices are falling. You wouldn't expect that. You wouldn't expect bond prices. You wouldn't expect yields to be going up on the long-dated bonds and gold going up and central banks cutting everything really quickly all at once without saying what the danger is. So there's something brewing here, but I think that's a second quarter 2025 thing to deal with. And between now and then, skyrocket.
That said, there were some recent changes here just in the last couple of days. Even on the 1 month curve is starting to come back up. But you do make a good point. Some of the longer dated Treasury bills are starting to pull back a little bit, as the 2 month, the 1 month have gone up over the last couple of days alone. So it is interesting to see how the bond market has responded to this. I assume you meant Treasury. Federal bonds, not necessarily the corporate bond market.
No, the corporate bond market, the like the LQDs, the investment grade bonds, those are doing well. Those are doing well. But the the 2-year up to the 20-year, it's an interesting story that's happening there.
It is. I'm with you there. Yeah.
But I don't put on I don't put on steepeners on bonds anymore. I find it. I don't have enough money to put into the bond market to make it worthwhile to put on those trades like I used to. But it's interesting for anyone.
We'll get you back there, Tom. We'll get
right.
you there.
Excellent. Well, that's it for office hours for this week. Is there anything else you wanted to touch on before we say goodbye?
That was it. Hope everybody had a good week.
Excellent. And be long Bitcoin. And if you don't like Bitcoin, short Bitcoin. But take a trade. Put a trade. Life is way more interesting when you have a trade on. Everyone agrees with that.
#NFA.
Excellent.